Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, January 6, 2022. It is 10:03 a.m. Eastern Time as I'm starting the video, and we'll keep this one quick. I wanted to give you an update on the equity markets and then crypto as well. I told you there's some levels I've been watching to see if Bitcoin falls to, and I'm going to cover that and Ethereum for you as some trade ideas. All right, so QQQ, this is the daily chart. I've gone over this in detail lately, so I'm not going to go over, spend a lot of time on it here. This is that big level, bottom of the trading range. These two recent lows right here in QQQ, there and there, they were effectively a back test. We dipped down below that previous high. So again, effectively a back test, and we're coming back down there again. So I know this is a busy chart, but you have this trend line here, right there, it comes in. And you also have what I've colored up as yellow, this level. Right there it says 377.64, so give or take. And remember, on a daily time frame, you're going to increase the odds if you see a solid daily close below that level. Yeah, there's a little bit of support there, and again, the way it works is 373. If that's also taken out with conviction, that opens the door. So for forever and a day now, no, actually, for just past couple months, I've been calling for a pullback, a likely pullback to these 200-day moving averages. That's something I didn't cover in yesterday's video, but in recent weeks I have. And again, the 200 days help define uptrends in QQQ, which it still very much is from a longer term perspective and even intermediate term. And I've covered that before. Every so often, the indexes will come and check those 200. So again, it aligns with that 360 target right there. Probably get a reaction on the 200s. Be possible but unusual to see us just slice through the 200s like they're not even there and keep going. But quite often when you come in to test them, you'll do a brief overshoot, maybe even for a day or so, and come back trade on them. But I still maintain this daily swing target zone. I think at this point there's enough evidence to say that the 200s will get taken out. So to me it's just a matter of do we have a reaction on them, and how much of a reaction? Is it a tradable bounce? I'll tell you, I'm more apt to kind of just sit tight on short positions now. You've got a Fed. Again, it's not a matter of if they're going to raise rates, it's how much and how fast is now the question. So that narrative's changed tremendously in the last 6 months. You went from super easy Fed to now, gradually. It's been, in my opinion, way too slow of a turn, but they've clearly pulled a 180 and will be subtracting liquidity from this economy, and that's taking heroin away from the patient that they've been pumping full of dope for the last several years. So that's that. There's the levels to watch. Let's keep it simple. Divergences and everything else are the reason I think we'll continue down and are looking at a bigger correction to come. And I wanted to just make mention, since yesterday's video we had a sell signal. I remember I covered the big FANG stocks and told you things I'd be looking for. And one of those being Microsoft. You have a primary uptrend line off the March of 2020 lows, and that one was taken out. That's the yellow line. Then you zoom in a little tighter, and I have two yellow lines really right here. That one was important because you had these two previous reaction lows that coincide with those previous reaction lows on QQQ that are currently being tested. But Microsoft, remember, those a little bit different than the Qs. This was our previous high. In fact, we had a double top high right there, and then we broke out right here. So I have a yellow line there, and that's the one that, quote unquote, should do the trick, at least for Microsoft. Remember, Microsoft is one of 100 companies in the Nasdaq 100. It's one of thousands of companies in the Nasdaq Composite, but it has a high weighting, so I'll be watching that one. I just want to say that so far that's a check mark. It's not an all-in type check mark, but it's certainly a check mark for the bears for the short case, and then we'll have an additional check mark if and when 305 is taken out, especially with conviction. Either that means very clearly on an intraday basis, or if you want to play it safe, wait for a close. And then you've got the 200s down there. But I think Microsoft will overshoot the 200 days. 200-day simple is right there. The red line's the exponential. Don't know if you can see those in the video. So probably have a little momentum going into this because that's the way corrections usually happen. I think we're going to have a lot of trap longs rushing for the exits, and you'll probably overshoot, hit 283.10, give or take, and then bounce and park it at least for a day, have some consolidation around those 200s. So that's what I'm looking at on Microsoft. So again, a little check mark there, looking for the next check mark on a break under 305. And the other one I had an alert on yesterday as well was Apple. I gave you this trend line on Apple right there. Rising wedge, negative divergences, and there's your check mark, a solid break and solid close below the trend line. So that gave me the sell signal on Apple yesterday, and a follow through red candle today. So far so good. So I don't see anything really. Anything's possible, a back test or a full recovery of the level, but really there's not much support until about 167.55. And same kind of thing, you have a 50-day moving average there as well. Probably get a little bit of reaction and then come on down here. So if you're looking to buy Apple as a long, a bounce trade, my preference would be to wait to see if we get down to 157.30, and then at that time, if and when we get there, where's QQQ at? Is it at any of those support levels I mentioned? Are there, any divergences? What do things look like? So, but as of now, whether we have a little snapback rally or not, I think we'll see a little more downside, and that's about 9 from where we're at right now, 9%. So from where it was yesterday when I did the video, that would be a drop of about 12.5%. All right, let's give you the Nasdaq 100. Remember, I'm focused primarily on the Nasdaq because it's just more bang for your buck. It's my preferred trading vehicle. So I went over the S&P and small caps for you yesterday. That's the big level still, 15,536. We're getting close there. These levels are often like magnets, so we could reverse now, but I doubt it. It'll probably come on down there. And again, we've already checked it twice. We've had 2 taps at that level, 2 distinct reactions. So a solid break, again, anything more than just an intraday whipsaw and a recovery back above it is going to be bearish and quite likely open the door for more downside in the NQs, probably all the way down here to about 14,423. All right, let's give you cryptos. All right, so on Bitcoin futures, that's symbol BRR. You can also trade the, they've got a little micro contract on Bitcoin, and that is, I think it was an MBT. Yeah, MBT is a symbol. Trades on the same price levels. It just has a smaller leverage factor. So you can layer in, scale in. So I told you way back here we had positive divergence, but I said, look, if we get down here, I'd really prefer to see Bitcoin get down here. 41,484 is support, pretty good support, and we're very close now. So based on where GBTC is, which I'm going to get to in a second, that is at support. So we could reverse anytime now. And so for the first time in a while, I think this one is giving you an objective entry here down to, but not much below that 41.4. I wouldn't add below. You can hold out, allow for a little bit of stop, a little run through there. But once you break support, I'd hold off to you if we break it to you recover back above, solid break back above 41.84. Let's see, that's the January contract here. We might want to roll to the go with the February contract. Either way, that's what it looks like, and maybe a downtrend line there to be taken out. It's not super well defined, but I'm really focused on this divergence. Just like we had a divergent high here and gave us that correction back there, we actually had positive divergence right there at that recent low here. It gave you that rally, and you had a divergent high here, and it gave you that correction. So, and that was also a divergent low back there. So, wash, rinse, repeat kind of stuff. Anywho, that's Bitcoin futures. Let me show you GBTC, and then I'll show you ETHE. GBTC is a ETF type instrument, and you can see this. We've had, tons of trades on this in the past, but this was a level back here from the last short trade on Bitcoin before this one, and we had negative divergence high into resistance, shorted it at 39.25 at that resistance, and hit first target there, second target, and my third and final target there Final target's typically where you'll reverse, and that's what happened. We rallied up, put in a divergent high, and now we're back there. So it's a pretty big level because you have a lot of reactions there and a big old gap above there. So we're a hair below it now, but again, we're a hair above support on Bitcoin futures, and as such, you also have positive or potential positive divergence. That means we need to see this PPO turn back up soon. If it does, that'll give us confirmed divergence. Where to? Just for now, maybe just get in there if you like it. That is, take a long. I'll give you targets later. I think we could bounce all the way back at least to maybe 39.25 right there. Minimum. You can see these are the same levels. I have not touched these lines in a while. Same levels that have been on the chart, and it continues. Bitcoin acts well to the technicals. I always say that, and that's most likely because there are no fundamentals to it, really. I mean, very little. As far as typical fundamentals a company has, like earnings and debt and share price dilution, all that other stuff. On Bitcoin, what gives it value is its finite number of units, if you will, not shares. But again, I've talked about the longer term bearish case for a long time. Is that Bitcoin has a finite number of units, but then again, there's every day the proliferation of more and more cryptos. Anybody can just make a new crypto up out of thin air, and that money is chasing. And that's what's been happening for years. Bitcoin was the first one. First to market, if you will, but then you came out with other ones, and there's just so many out there. But let me tell you the other big one. The two biggies are Bitcoin and Ethereum, and you could do ETCG. I just can't looking at this chart, I can't make a strong case to buy ETCG, at least until it gets down here to about 1109. We'll call that 1110. So there could be a little more downside there, just like Bitcoin. Could be a little more downside in Bitcoin as well. Let me go back to the futures and just show you one other thing. So consider it again. Oh, I already covered that. Buy down to, but not below 4184. And then back to Ethereum. ETCG, if Bitcoin reverses, ETCG will probably reverse. You can see it's got nice divergence building on the 60-minute time frame. It's had divergence for a while. It had a little bearish falling wedge there, and it popped, and it's not like it didn't go. Rallied 17.5%, 18, right about 18 on the button almost from the breakout point. And now again, divergence, but no buy signals. It's just in free fall, and it could continue lower. So we either need to see some type of bearish reversal, candlestick patterns or something, or it hits support. But the one I like better is ETHE right now, I'll tell you, of the two. ETHE, this is a 60-minute chart. There was our last rising wedge, still has divergence. Coming up on support right here, you have a major reaction low, a couple of them right there. So there's your level. So I see a little bit more downside, and if that happens, that might carry Bitcoin down a little lower. Maybe, maybe not. So again, my preference is to start scaling in now so I don't miss a reversal. Sometimes things reverse just shy of support. But there it is, down to, but not below 2670. You can leave your stop a little bit below to add allow for a little whipsaw down through there, but I wouldn't add, only if it drops through and recovers back above there, and the charts still look constructive. By constructive, divergences or extreme oversold conditions at support. That's the 60-minute chart. Here it is on the daily chart. There's that level 2661 is what it shows on the daily chart. So there it is. So that's I think a pretty decent level. A little gap right there, but most importantly, a distinct reaction low there, a couple reaction lows there, coming up on support. And if you're a little bit longer term trader and you really like crypto and you want to get back in, and you heeded my warning, got out here long or got short, got out of your longs or got short when we broke this bearish rising wedge right there. It was nice and clean, bearish rising wedge, negative divergence that led to this correction here. This would be a scale-in zone all the way from, again, you could start here down to, but not below this trend line right there, and that's a pretty wide scaling zone. That's why I call it a scaling zone. You add a third of position here, a third if it gets there, and another third down around 2319, or the trend line would stop somewhat below. And again, because we could have a much larger swing, we could run back up to the other previous highs, at least back here to 3150 at minimum. So that's it. So anyways, just throwing out ideas for you. Again, starting to warm up to crypto. Think you could have either, maybe an aggressive trader, start scaling in here. If you want to be a little more conservative and wait, see if you can hit those downside targets. You can wait for a reversal, but sometimes if everybody decides all of a sudden they want to be in cryptos, this thing could really take off, and then you might miss the boat on it. All right, that's it. Just under 15 minutes. Let me wrap this one up, get it out to you guys. And again, if anything else stands out, I will I'll do a separate video or get some chart images out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.